following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Kobe Yamada. Believe in the magic of tomorrow, and your spirits will be lifted on the wings of hope. Market-wise, let's take a look at it out here. We have the Dow Industrials down 148. You get NASDAQ off 75. S&Ps are down 25. Gold contract up $6.40, traded at $1,193 an ounce. Silver down up 8 cents at $16.52 an ounce. Platinum flat at $1,145 an ounce. Copper $2.92 a pound. Light sweet crude up $1.52 at $60.45 a barrel. Bonds, we have the 10-year down 11 ticks. 127.13, 30-year off 21 at 156.04. King dollar down 462 ticks, trading at 95.18. You get the euro up 54 at 112, and the yen is down 28 at 119.85. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? If we go over to the SPY, what you have is this, folks. The SPY tried to get to a higher high yesterday. Couldn't handle it. We got up to a price point. Let me get this on the day. So the high of yesterday was 212.02. We did 70 million shares. Was going into the last high in the downdraft. Bottom line is that we were coming into a 160 million a day. Today you're going downtown with 79 million. It's going to have to go. It's going to go after the lowest swing point again from the 30th of April. Now that's on the daily. On the intraday chart, what we're doing right now is this. When on the 30th, folks, when we had gapped up. If you take a look at the SPY, the top of that gap is 208.53. I'll put this on an intraday chart for a second. That's where this market wants to go right now. This is going to fill this gap from the gap up on the open on the May 1st. So it's pretty clean what it's doing. What I expect you'll probably see out of that, I suspect, we'll see whether we fill it before the close today. I suspect more than likely we will. You'll get a little bounce out of this. Not a big bounce. It's just going to fill it and basically die on the vine. The Qs. What do you have with the three Qs? The Index 100 right now is showing. Yesterday, you had the small caps basically give it up. NDX 100 is giving it up today. You get 32 million shares. You're coming into that lowest swing point. That has 44 million. That lowest swing point in the three Qs. That price point out there is 107.06. Right now at 107.47. So I don't think it's going to get down there today, but what it will do, it'll wake up tomorrow morning and it's going to be going after that level. Bottom line is that you had the test of the high, you had lighter volume, rejected price, had lighter volume. What that sets up is that we're going to be running down to the bottom of the consolidation, and we'll see if we get the volume expansion. We definitely have the volume expansion today in the NASDAQ, in the small caps. Small caps are getting taken to the cleaners once again. We go look at the IWM. IWM is breaking the swing point. IWM is off $2. That lowest swing point is 120.66. That had 73 million. We're doing 40 right now, but you basically broke it down. If we take a look at this IWM, we bring this out a bit. bring this into a weekly basis, what you're going to see, and this is where it's going, folks, okay? This is going to be wild watching this shake out. It looks like the IWM is leading down, and, you know, we'll see how it attacks. So the IWM, yeah, this is heavy, okay? So this would just happen. The IWM has just got inside today the lower range. The lower range being, if we pull this back a bit, what you're going to see is that now that we're inside 120.83, yeah, 120.83 to 120.97 with that setting up. That's setting up to go after the October 15th swing low. That's the high volume swing low at October 15th, and that still is a long way down. You're down a couple bucks today. The high of that low is 107. The low is 103. So this baby has a long way to travel downtown. Gold contract. What do we look at gold? Let's take a look at it. So gold contract out here today. Jeez. We're trading right now at 1192.90. Put this on a daily for a second. Bring this back. Okay, so this is what we have with gold. Gold rejected lower price last week. Got under the swing point. The volume came out at the swing, or before the swing, rather. So what that sets up is that you have a rejection of lower price. You have it on lighter volume. That sets up, you're going to build cause to get into the highs that were generated out here at 1224. I expect you're going to see high volatility inside this gold market. It's going to continue, and you're going to grind back and forth until we get up and into this 1224. What's really cool is this, folks. I did the gold report out here today. I'll show you something. If we go over to Franco-Nevada, Franco-Nevada is the first equity that made it over the downdraft in the gold market with conviction. We take a look at this on a weekly. What you're going to see, the downdraft that I'm talking about is the March downdraft. And what you're going to see if you put this on a weekly basis, you're going to see that bottom line is that we got up and into that with 3.8 million versus 3.3 million. That's a decent indication. Number one, that the gold contract wants higher price. Number two, that the equities want higher price. Excuse me. King Dollar. Let's go take a look at King Dollar. What does King Dollar have happening? King Dollar, ABC structure on the way down. This is going to be wild watching how King Dollar shakes out, particularly because the whole world was bullish King Dollar at the highs, bearish at the lows a couple years ago, and right now King Dollar is set up for an ABC structure on the way down. We'll see how it attacks the B point. The B point on King Dollar is 94.47, and it is going to need a lot of volume in order to basically get a confirmation of an ABC structure on the way down, because we had done 82,000 contracts there, 83,900 contracts. So I suspect what you're going to see is that it's going to go after it tomorrow. Now, the price projection on this is pretty intense. The price projection on King Dollar with this ABC structure on the way down runs you into 92. 92, and we're at 95.20 right now. Let's go over to the bond market. We take a look at the TLT inside the bond market. Bonds have been moving lower. The TLT is trading at 122.39. You're below the March 18th price point. Now, that's where it was going. It's a high volume swing low. Thus far, we've done 11 million versus 20. That low is 122.97. We're below that low. We put this on a weekly basis. And what you have set up here, let's see. So, I mean, you get game here. The next stop with this it would be October 13th. The low of October 13th inside this, it's a lot lower. It's at 120.05, and we're at 122. If we actually take a look, let's go take a look at the 10-year right now. So the 10-year today has done 1.3 million. You have the volume contracting. The volume's contracting, so there's going to be some kind of a bounce out of here. What the bond market is projecting right now, though, is this. Bonds are so weak, with the market even down, no one wants bonds, okay? So I do expect you're going to get some kind of a bounce, but that's actually screaming that those bonds probably topped out in February. Let's go to oil. Oil has had a bid underneath it. Is at the $60 mark right now. Oil's done 342,000 contracts today, and guess what? That's still enough. This thing can still, we're at 60.48. This is going to blow some minds, I think. Bottom line is that this thing can still, let me see something. Yeah, hold it 1 second. This looks like it's a small ABC up. This is pretty intense. Okay, let's put this on our daily. So what we have here is that coming off this low, your A point would be 45. Your B point is up at 58. Yeah, 55, 13 bucks. Your C is 55, 65. That's 68. This thing go to 68 and you're only at 60. Pretty wild. This is Tom O'Brien. This is TFNN. You stay right there, folks. Coming right back. Dow right now is down 147. Nasdaq's off 74. S&Ps are off 25. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow Industrials down 155. You get the NASDAQ off 75. S&Ps are off 26. Now let's go over to our man, Mr. Basil Chapman. Don't forget, folks, Basil has an outstanding show right here every trading day, 11 to 12 Eastern Standard Time. Tonight, it couldn't be at a better time, folks, okay? He has a second webinar. That second webinar is going to be all about the similarities between the 1929 market and it's going to be revisited, the 1929 market. I can't put words out there, that's for sure. Come over to our website at TFNN. Now, you can get into this webinar, and in fact, you can not only get this webinar, you can get the one they did last Tuesday night by just signing up for his newsletter. You can test drive it. It's free test drive. If you don't like it, guess what? It's $128 value. You get your money back. Bottom line, you get 2 webinars. You get the newsletter for the month. Get a great education. Basil Chapman, what's going on? Basil.
Hi, Tom, you there?
Yes.
Hi. So, perfect time, yes.
So tell us what you're going to teach in the workshop tonight, Basil.
So there are a couple of things that are going on. The chart pattern that I'll be focusing on tonight is going to be a much longer-term chart formation. And to go with that pattern, I have to also be looking at the similarities and the dissimilarities between the late 1920s and the period we're in right now.
Okay.
So I've drawn them up. What are the coincident factors, and what are the ones that we are still waiting to see? In this particular instance, because of you spoke about the timing, and I would concur. I'd say this is just perfect timing for 2 reasons. One is, I'll just show you this quickly here in the chart of the Dow. This is what I show my subscribers to my opening call every day. We made a peak D top. In the Chapman wave, it's this real simple thing. We look for 4 higher peaks, and when you get to the 4th highest peak, I letter it peak D, and that's where other things can happen. In this particular instance, I've got a down arrow at 18,175. In all this time, since March the 3rd, the Dow has not been able to break to a new all-time high at 18,288. It's got close. It got to 18,175. It just hasn't been able to do it. And that says to me, remember I spoke to you weeks and weeks ago, I said, I believe that we're probably in some kind of a mini recession.
Yes.
But in economics, you only find that out
after it, yeah.
Weeks, months later, right.
Right.
So all the things that I looked at suggested that there was an economic slowdown. Now, what's really important is that within the context of the weekly charts, and this is why it's so important, there is a leg that went to a potential peak D in the weekly chart. That says there's a chance that there could be a deeper pullback here. The Dow, INDU, has gone to the same sort of thing. It's gone to a weekly peak D, but it went there a little earlier, and it hasn't been able to take that out. So there are levels that we're going to be looking at together when I go through the charts, and we will also put together the aspect that I always like to include, and I thought I'd come up with this as an original thought back in the 1980s, but I found out that someone in the 1950s had done that, and I call it the skyscraper theory. Now, of course, people are talking about it a lot more.
Sure.
But let me just show you a chart right here. This is going to be shown tonight. These are the world's tallest buildings as they came up. And look, there's the Shanghai Tower. And what happened with that, it came about right at, and I'm going to show you something really interesting, as the FXI...
Where's Sky City? Where's that?
I'm going to show you that in a moment.
Okay.
The FXI made its peak in 2007. Right, where did it go, the FXI? Oh, I don't have it in front of me right now. But it made its peak at the same time as that, as the market made its high.
As Shanghai, right? Yeah.
Right. So now look at this. The Sky City is being built. That's in China. And right there in the Texas is world's next tallest skyscraper, the Phoenix Towers. We're up to 900 meters. And what's happened is I went through it in the last webinar that the Petronas Towers was the exact top in Malaysia.
Yeah.
The Burj Dubai, which was called the Burj Dubai, they had to change the name from the Burj Dubai to Khalifa because a week before it was to open, they closed, they shut down the stock market because the market was breaking down.
Yeah, right.
And they opened it a week later. You remember that? And then the building was opened. It was opened at the exact moment when the market was crashing. So these things, the Petronas Towers, you can just go right through the list. The Empire State Building, the papers were signed in July. So the United States is not yet. I'm sure it's going to happen here. We haven't even announced anything like it yet. So my suspicion is that that's still to come. So what I'm going to be discussing is that this is the exact time that I'm looking at now for some kind of a consolidation to take place in the market. It's already been rolling through. Remember, we spoke about the IBB. So some of the sectors are really deteriorating. The IBB, which for my subscribers, we've been short for a while, deteriorate. Look at that. That's the biggest drops that the biotech has had. When you look at the XLV, that's the healthcare sector, also looking like it's deteriorating on a shorter term from a weekly to the daily basis. Monthly hasn't given a signal. So I'm going to be showing which sectors look the weakest. I'm going to be showing which sectors might come out at the end of this consolidation stronger. And I expect that after this consolidation, we will have another big move to the upside, and that's the period that we'll be looking for, where it's announced that the United States, somewhere it'll be New Manhattan, Chicago, who knows where, but the world's tallest building. You know that in March of 2000, Popular Science had the front page, world's tallest building, I think it was called 6 Dearborn in Chicago. It was never built, but it was about the papers were about to be signed as the market turned down at the exact top in March of 2000.
That's wild, huh? That really is.
Well, I call it it's man's time freeze, his ego of a particular period in history. And it's really a statement to say, look, we've made it. And as you do that, I've got my expression that says when you take your hands off the wheel to pat yourself on the back,
yeah,
that's when you hit the tree. And that's the same. It's humility, it's hubris. That's what happens. And
well, what's wild is that's just what happens as the world grows anyway. It seems that because it seems like every city, everyone gets over their head, but then that makes the cities great. Then they go bankrupt. Then it starts again. I mean,
as we're speaking right now, they are just putting the shovel in at the New England Conservatory of Music, where I got my master's degree.
Yes.
For a brand new complex. I've been waiting for this for I don't know how many years.
Okay.
And the last time they did this was in 1929. When they added to Jordan Hall, which is one of the most beautiful concert halls in the world.
Right.
They added 2 halls next to it. Right at the top, they had the most incredible foundation. They had a lot of money, many millions of dollars.
Sure.
And unfortunately, in 1953, the conservatory was almost broke, and
it's amazing.
The building lasts for years and years, and that's what you want to see. But when it happens, that's what you got to be careful of.
Listen, folks, come over to our website at TFNN. You go right to the front page. You can sign up for his newsletter right now. That gets you into the webinar tonight. It's 5:30 to 6:15. If you can't make it live, it's archived for 1 full year. Basil, have a great night, safe night. We look for the webinar in another hour and a half.
What's cool? It's taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So you get the Dow down 122, Nasdaq's off 68, S&Ps are off 23. After the close out here, going to be a lot more action, folks. We got a lot of numbers that are coming out, and each and every day as we wind through this market, what you have had happen is that the equities that are down versus up, in a large sense, pretty intense. You had the blow up. It seems, well, each and every day there's these blow ups. If we take a look at this is not necessarily a blow up, but when you do take a look at Anadarko Petroleum, what you have is this. Now, this baby, you talk about coming down with velocity. This has tested the highs of the downdraft. Okay, so watch. This is pretty amazing how this technically is just about as clean as you can get. Anadarko had come off the high of $112. That was in August of last year. Goes down, has a couple of gaps, goes down from the $112 level to 75. Does a nice retracement right up to ice. Bottom line, that hit about 95. Couldn't handle the 95 area. Comes off that area with monster volume out here today, just basically taking itself pretty quickly. And now we'll see what this little baby is that she's going to be making her way all the way back down. I mean, let's see. If we put this on a weekly, what you have is, we'll see how this equity handles the 84.93 area. Now, the 84.93 area on this, it doesn't mean it's going to hold there. You had a little juice. If it doesn't hold 84, now check this out. This is how this is intense. If this doesn't hold the 84.93 area, which was the high of December, see ya. That's going to be a $71 stock. So that these counter trend bounces are pretty intense. When they start going south again, they go south in an incredible way. There's no two ways about that. What we have had is that the amount of equities that have gone down and gone down with juice versus going up, just absolutely incredible, really. You know, because what you had is that when they take them south, they're going down 30% in a heartbeat, literally in a heartbeat. You know, so folks just, even if you had to stop in some of these, you wouldn't be able to get out of them. Why? Because they gap lower once their earnings are coming out. That's how the couple of these have shaken out, particularly inside the NDX 100. Now, what's taken the NDX 100 south today is this. You get Baidu.com. Baidu's down 925. You get American Airlines off 181. Fastenal is off 146. And Avco Technologies is off 381. Putting strength into the NASDAQ, you have Netflix up $12. Tesla is up 284. Akamai Technology is up 39. And Checkpoint Software is up 28. Inside the Dow Industrials, the strength inside the Dow, we're down 109, which really is not that bad. Visa is up 55 cents. Walt Disney is up 40 cents. You got Chevron up 8 cents. And you got Merck up 35. Taking it south, Intel is down 42. Apple is off 218. DuPont is off 124. And Home Depot is off 170. Let's go over and take a look at Home Depot. So Home Depot's been on a HD. Huge run topside. We take a look at Home Depot. Okay, we're going to put this, I'm going to put this on a longer term chart because these babies have been on an extreme run. And I'm going to put this on a monthly. And what you're going to see is that Home Depot went straight from $28 to $1.20 without a retracement, basically. It consolidated, it went sideways. So your A point was 28, your B is 81. Holy cow, 30, that's 52. Gets you 120. Oh man, you want to see something bizarre, folks? Okay, so check this out. This was it wasn't, let's see, 148 million shares versus 158. Okay, so when this took the B point out, it took it out with 10 million shares, but it did an A to B equals C to D. You know, almost right to the dollar. So what do you do when you do an A to B, C to D? This can come all the way back now to 81. That's, you know, that's a normal retracement, by the way, in a equity or a market that can go higher. So that's pretty bizarre, but that's how those babies do shake out. Let's go and we take a look at Big Blue, IBM. IBM, of course, had come off that bottom, did a nice counter trend bounce, and this counter trend bounce, IBM had been trying to get over the 165 mark for quite some time. Made it over it, and made it over it, by the way, on the weekly basis with some juice. Not enough, however, to basically sustain higher price. What we did is this. When IBM had gapped down, That was gapping down in October. That had gapped down with 69 million shares. When we went topside, you went topside with 35 million. Now, then what you did last week, you get into the gap and you had 21 million. The top of that gap to fill that gap is 178.96. Doesn't look like it's going to do it. Because what you're going to have now is that you got to 176.30. We'll see how we back down into the 170.33 level. But IBM is not out of the woods yet by any means. Pretty amazing, too, actually, when you take a look at this. ExxonMobil, let's go take a look at Exxon, because what we are going to see here on a continual basis, it looks to me, you know, I suspect oil's not done going down, but guess what? It wants to go up right now. We're at 88.82 on Exxon. Yeah, and Exxon, this is an ugly chart, folks. So check this out. You get one of the largest oil companies in the world. Exxon went from 104 down to 82. You're doing a counter-trend bounce with anemic volume, and what you're doing is that you're coming right into ICE. ICE on ExxonMobil is set up at 90.90, and we've hit 90.09 today. You know, I heard our man Dave White talking about the XLE right before we get on. Let's pull that XLE up. So if we take a look at the XLE, of course, inside the XLE, you have Exxon's the largest holding. Chevron would be next. You get all the large multinationals in there. And this is about as clean as you get. So if we take a look at this and we put this on the daily chart, what you're going to see is that it had a gap down November 26th. It gaps away. This little baby couldn't fill the gap. You know, the bottom of the gap is 82. The top of the gap was 88.15. We get up to 82.23, gives it up. Now, what is it going to do? Now it's going to see if it can hammer out the lows. We're at 81.85. Game is on now to about 73.91. So that's going to be wild, basically watching how that whole deal shakes out. If we go over to the gold market for a bit, we take a look at the GLD. What you have with the GLD is this. GLD is building cause for higher price. We're at 114.42, and what you will see, if you're in that gold market, folks, put the weeklies up so you can see what we did last week, and this is kind of right across many of the equities. XLE, HUI definitely had done it. Is that when you were pushing into the swing point, you're pushing into it with volume, big volume too. The GLD pushed in with 39 million shares. The swing high is only 22 million. Now, the sellers up there, they were selling. That's why I couldn't hold price. But when you're pushing into the swing and you're pushing into a swing with volume, you'll back down, you'll build more cause. Cause for what? Cause to accelerate coming into the highs once again. Baidu.com. We take a look at Baidu.com. Baidu's down at $9 right now. And what you did have last night, folks, Shanghai got toasted and roasted. Now, the Shanghai market had been up 40% in like 3 months. It was down it was down 4% last night, and it had juice behind the move. Baidu, we take a look at Baidu. What we have with Baidu is this. She's breaking lows, has volume behind the move. Right now, we're at 194. This is big trouble. So your next stop is 159. This is pretty intense, actually. Man, when these things... So watch what has happened with Baidu is this. Everyone that's bought this from July of 2014 is in a losing position now. That's always a problem, folks. That's a huge problem because that's a lot of buying. We'll see how this attacks the 159 area, but right now, that's what it looks like it wants to do. If we go back to Shanghai for a second, what you do have in Shanghai is that had come off the highs, and it was down 4.6% last night. No, 4.06%. Had the juice behind the move. You know, we'll see where this wants to get into. It looks to me like your next stop is you're at 42.98. 41.95 is game. That's about another 100 points down. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 28th and May 5th that only subscribers to his opening call will gain access to. On April 28th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's Opening Call newsletter today on the front page of TFNN.com.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host of TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We have the Dow down 140, NASDAQ off 75, S&P's off 25. And as we do each and every Tuesday, folks, at 20 past the first hour, we get our man, Mr. Darryl Martin. Don't forget, folks, Darryl has an outstanding show right here at TFNN every Tuesday, Thursday, 1 to 2 Eastern Standard Time. Darryl and I also do another show on Friday mornings, 10 to 11. Check it out. Darryl specializes in the Nadex platform. And if you haven't test drove the platform yet, folks, come over to our website at TFNN. You can see the banner on the top, on the side. You can hit that banner, bring up the platform. It's a defined risk type of platform. They'll put $25,000 of paper money into your account. You can see how these contracts trade. And they trade commodities, they trade indices, they trade currencies. And bottom line, folks, they're dynamic. You have a high volatile market right now. And when you get a high volatile market, you've heard the promotion many times, is that your trade is your stop. So bottom line is that when you have volatile markets, this is always nice having a defined risk. Darryl Martin, what's going on?
Hey, man, how you doing?
Doing great. You having a good day out there?
I'm having a fantastic day.
That's a beautiful thing, man. And listen, folks, once you bring up your account, once you test drive it, Darryl is a great analyzer. You can test drive that analyzer right on the front page of TFNN. And what that analyzer will do for you, folks, it's not going to tell you whether to go long or short. What it is going to do for you specifically is going to tell you what the best contract risk versus reward is inside the dynamics of the platform and the aspect of the deviation levels. And the deviation levels flat out come down to the point that you've heard me many times, nothing goes up forever, nothing goes down forever. It's about when markets get stretched intraday and or daily. Yeah, so we got some nice volatile action out here. Well, particularly, in the markets themselves, but man, these currency moves are pretty intense too.
Exactly. They've been fantastic. There've been some great currency moves. It was really flat yesterday. It was just with Britain closed and with Japan closed yesterday, and then Japan having a holiday again today. That'll be over, of course, when they open it back up, which will be nice tonight. But, there's some decent little moves last night, but really it's the best time to do butterflies. I mean, yesterday was a butterfly haven.
Right.
And, I had a couple traders post some stuff on Facebook and stuff that they did. And, this is one of the traders right here, Christopher. He put up this trade, so I was showing it on today's radio show on the Diagnostic Trading Hour.
Yes.
And I just walk through the iron condors. A lot of times I'll take the show on Thursday and I'll talk about all the condors coming up for the next week that you can do.
Okay.
And basically it's just to put it on and go to sweep trade. You don't spend more than a few minutes on it and you're done.
And the iron condor, you want to put that type of trade on what type of market?
Usually on an FX market.
Okay.
Okay. And usually when there's government news coming up on that FX pair.
Yes.
And the natural inclination is to go in and do a strangle, meaning hey, it's going to move big in either direction. Because when you read, Forex Factory and Investors.com and all that stuff, they list high impact.
Okay.
Well, high impact means it's a very important thing for the currency over the long term. It doesn't necessarily mean that it's going to have a high impact on the FX price immediately.
Right.
And really that impact comes when it's a massive surprise to the market, not that it's an important thing, right? So the market expects this number to come in at this, XY's at 1, 2, 3, 4, and it comes in at 1, 2, 3, 4, or close to it. That's really important, but it's not a surprise, so you don't have a massive move. Okay?
Yes.
So what I do is I look at the 5-year, the 2-year, and the last 12 months specifically. I get more weight to the last 12 months. But just to get an idea of the 5-year and the 2-year, and I pull all the stats on them. I look at them and I go, how much does this currency move on this news announcement?
Okay.
And I'll look at so when can I get in before the announcement, and what is the expiration after the announcement? And so during that time frame, how much movement do I usually see from high to low? And by looking at that, I can go, well, on the pound dollar, on the report that came out last night, I'm looking at it and I'm like, okay, well, I usually can go in and I can usually put on this trade, and there's about 30 pips of movement on the trade. Okay?
Yes.
So usually the market moves up or down about 30 pips on average whenever this news announcement comes out. So it may pop up 30 pips and pull back, or it may pop up even 40 and pull back. But by the end, it usually is pulled back to 30 pips or less. Okay?
Yes.
So if I can get a profit on buying a spread and a profit on selling a spread of $30, and that's if the market really doesn't move. Okay.
Yes.
So this is pure, option premium. It's like a credit spread,
right?
And so I'm just collecting the premium instead of paying the premium. If I can get a premium collection of basically $30, 30 pips worth per contract, I mean, you could do 1, 10, 100, make the number bigger.
Sure.
But on just a single, condor there, buying and selling the spread, buying the lower spread, selling the upper spread, getting $30. Well, if it moves up 30 pips, I'm break even. Okay? If it moves up 60 pips, which would be twice the normal move on this news announcement, which has probably happened less than twice in the last year.
Okay.
Then I, basically lost $30 2 times. So I'm down $60, but I won $30, 10 times. So I'm up $600. So I net $540 over the course of the year on just that one news announcement.
You're right.
Okay?
Exactly.
Now,
and
you
that's
10
strategy.
contracts, and now you're at $5,400. You talk 100 contracts, now you're making $54,000 just trading one news announcement a month. Okay?
Yes.
So, playing the stats on that and putting all that together. And so, literally, I just go in, I put the trade on, very specific one, put it on 11 o'clock for a 7 a.m. expiration. I want at least $30 of profit on this trade if I'm going to do it. And I was able to, you're able to go in, and even this trader was able to put the trade on. They put it like at 11:03 when they put the trade on.
Okay.
And they were to get $23 of profit on one side, max profit potential, and $22 of max profit on the other side. Okay, so more than the $30 minimum requirement. They got $45 potential profit on the trade, and that's as if the market ended right where it started.
Right.
Okay.
Right.
Which amazingly does happen quite a bit. But it ended up about 9 pips higher. So what happened was made, the full profit on the one I bought because it went up, okay, from the center. So made the full 23 ticks, and then on the one that he sold, instead of making $22, he made basically, what would that be, $13, right?
Yes.
So because it went up 9 ticks. So instead of getting all 22 pips, since it went up 9, he only got he only got $13 of that profit. So looking at, about a $36 profit on a trade. And this is literally, put it on at 11 o'clock, go to bed, wake up around 7:30, and see what happened. Trade.
That's good.
Totally. Doesn't take a lot of time, And then, there's another trader who's looking at it on the Aussie. Pushed that one a little bit, and he went for less than the minimum profit because it wasn't there. And that's one usually I'm going to back off of or leg into. But
yeah, it's
these are
going to be
trades worth
interesting because it
looking
almost
into.
looks like the Aussie is bottoming out here, which is going to be kind of interesting. Yeah.
Yeah.
Listen, folks, come over to our website at TFNN. Don't forget, every Tuesday, Thursday, right here, 1 to 2 Eastern Standard Time, Friday morning, 10 to 11. Darryl, you have a great one, safe one. Look forward to the show on Thursday.
All right, thank you. You too.
Thanks. Bye-bye.
You bet.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling, the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's gold report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is a quote by Duke Ellington. A believer is an optimist who thinks of tomorrow. Market-wise, let's take a look at it out here. We had the Dow Industrials close down 142, NASDAQ off 77, S&P's off 25, all with volume, folks. Gold contract up $4.90, traded at $1,191 an ounce. Silver up 9 cents at $16.53 an ounce. Light sweet crude up $1.47, trading at $60.39 a barrel. Bonds, we had the 10-year down 10 ticks, 127.14. 30-year off 19 ticks at 156.06. King dollar down 367 ticks, trading at 95.27. The euro up 39 at 111. The yen down 28 at 119.85. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay. So if we start with the SPY, folks, what you're going to see is this. The SPY today did 108 million shares. That's after trying to get into a high yesterday. The high that was trying to get into yesterday was the 212.80 area. We made it 212.02. You did yesterday 70 million shares. You did 108 million today. Bottom line, you had 3 separate tests to try to get into these highs up at the 25th of February. That high is 212.24. Can't handle it. Each and every time we come off those highs, what happens? You get an expansion of volume on the way down. What does that set up? Sets up a couple different deals. First deal, the bottom of this consolidation that we're in is 204.40, and you're at 208.90. That's the first part. Second part gets a little bit more intense. Why? Because you're already inside, back inside today. Oh, actually, yeah, we're back inside by 7 pennies. You're back inside the lower range, which is the 208.97. You're at 208.90. What does that set up? That sets up 197. 197 is basically a decent hit. You know, we went down 242 today, and when you look at percentage-wise, 242 is only a 1.2% hit. You know, the Dow was down 0.7%, the NASDAQ was off 1.5, and the S&Ps were off 1.2. We go into the NDX 100. We take a look at the 3 Qs. What do we have with the 3 Qs? Same type of setup. Had tried to get into the high, couldn't handle it. As we moved into the high yesterday, you had 123 million shares traded. Anemic. Today, gives it up in spades. You've done 43 million shares. Now, this is where this gets really wild. The NDX 100 looks like it's going to do an ABC structure on the way down. The B point is 107.06. Your volume characteristic there is 44 million. We did 43.5 million today. This baby's going to wake up in the morning and probably go right after it. The reason I'm saying that is that what you did have, you had China down 4% last night, and we had Europe off today. The DAX was down 2.5. And when you look at those markets, it looks like those markets are going to also close lower. The DAX is going to open up at its lower swing point, and we'll see if that wants to do an ABC structure on the way down also. The small caps. Now, the small caps had let us down. The small caps came off the highs, Russell 2000 this is, with some monster volume. It continued today. Yesterday, it tried to get higher with 37 million shares traded. Today, we go downtown. As you go downtown with 53 million. You broke the swing point. Now, this is not an ABC down because as we broke the 123.63 area, 120.66 area, we broke it with lighter volume. Small caps, IWM, bottom line, they want dramatically lower price. I suspect they're going to be running down somewhere into the 113 area. So you have some volume on the way down. You get consistency on the way down, meaning how you go up versus how you coming down. Gold contract. What do we have with gold? Gold continues to build cause for higher price, folks. Having a tough time holding price, no doubt about that. But what it had already done last week is that it had rejected lower price, had lighter volume. We got to a price point today of $11.99, back down. We did 105,000 contracts, and that's light volume. So what I expect you're going to see is that, it's going to it'll test the 1184 again. It's building cause to get into this 1224 area. King Dollar. Let's go take a look at King Dollar, because what King Dollar is doing, and this is what's going to be really great watching this whole thing shake out. You had the whole world built bullish on King Dollar. First time in, 4 or 5 years. Right at its highs, too. It's pretty amazing. Now, the dollar index is traded at 95.26. Your B point, this looks like it is a potential ABC structure on the way down. Your B point on this ABC is 94.47. Now, there's big volume down there, so it wants to go get tested at least. There's 102,000 contracts down there. The low actually has 83,000. I suspect we're going to be going after that in the next couple of days. This is a large ABC down. Your A point on this, folks, is 98.69. That was the high that was generated on April 29th. Your B is last week at 94.47. Your C is the high of today. What that sets up a 92 A to B equals C to D. So hold on, because you get a 92 A to B equals C to D, this market basically will take a few conniptions along the way. What do you have? You get wide price spread. You get accelerated volume. If we go over to the commercial real estate, what you're going to see is that the IYR, that also got taken apart out here today. The IYR, this traded down $1.67, because after the lowest swing point, this is ETF structure that has gone from 83 to 74. Has some juice on the way down. We put this on a weekly. What you're going to see, and this is all about rates. We put this on a weekly. What you're going to see is that the first place this has any support. Oh man, it already broke it. This is interesting. See, the first place it had any support is 74.95. So this baby is wide open now. Let me put this on a monthly for a second. She's wide open for 69. 69, where 69 is on this, folks, is the highs of June of 2013. So that has a long way to go down. After the close out here, still got a lot of numbers that are coming out. Let's go take a look at them right now. What's that? HLF. We'll start with Herbalife. This story just keeps going, and it's pretty amazing. So HLF, let's go take a look at it. This is the equity that between the Ackerman and the company, they've been going at it for a long period of time. This closed at $40. It's trading right now at $44. Numbers go like this. Their estimate was $1.01. They say they made $1.29. Their sales, they would have had a better sale. They see sales were down 1% to 2% on the currency adjustment move. They're raising their full-year guidance. Let's put this up on a larger aspect now. So you're up 10% after the close. We put this on a daily. Let's see how this shakes out. This war is going to be going on for a long period of time. You put this on a daily, and there's no movement. That's the real bottom line. On the daily, this has come off the high of $83. You're trading at $44 right now, and it doesn't look like it has any juice behind the move. Bonds. Now, the bond market, folks, if we take a look at the TLT, the bond market is rocking a lot of boats out here. What bonds did do today is that the TLT got to 121.69, had volume, yet rejected that lower price and closed at 122.66. It has to close back inside 122.97 to get any traction. This is Tom O'Brien. This is TFNN. You stay right there, folks. Coming right back. Dow finished down 142. NASDAQ down 77. S&P's off 25. We're going to be right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe future economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. We had the Dow off 142, NASDAQ off 77, S&P's off 25. Let's go take a look at Electronic Arts. Electronic Arts came out with numbers after the close here. And this little baby... We closed at $59. That is trading right now at $61.75. Numbers go like this for Electronic Arts. The estimate was $263. They did $275. The top line they plan on doing 4.4, which is a little light. They were looking for 4.52. We go over to, let's take a look at what we have here. Skull, S-K-U-L. This is a Skull Candy, not S-K-U-L. So Skull Candy, they sell audio equipment, headphones. That closed at $11.12. That's trading at $10.11 right now. This equity here, I mean, you talk about taking people to the cleanest, folks. I believe this only went public. Let me just see something. Pull this up. Maybe it went public in 2011. I thought it went public only, this year. But it looks like, yeah, I guess it's been public since 2011. So this is an equity that has gone from a price point of, looks like 22 bucks down to $5. Yeah, counter trend bounce up to this $11. Now it's giving it up again. NDLS, this was another high flyer NDLS that they pushed out in a big way. This closed at, this is a noodle shop. This closed at $20.71. This is trading right now at $17.25. Numbers go like this. Okay, their sales were up 18%. The revenue is $105 million. Their earnings per share was the 3 cents. Bottom line, the market must be looking for a lot more than that. The market cap on this, okay, so the market cap, $617 million. Look at that. It takes a lot of money in, man, but the thing's a dog. So if we take a look at this stock, man. This blows my mind at how they can push this paper out, but they continue to push it out, folks. So what you had is this stock went one way. It went $51 down to $17. That is a hit extraordinaire. No two ways about that. Big time, too. Now, let's go over to the XLF. We take a look at the XLF, bring this baby up. XLF hasn't moved yet. We take a look, put this on the daily. Now, inside the XLF, what we have is this. It hasn't been able to break higher. You know, what is stopping the XLF and has continued to stop the XLF is the January downdraft when the XLF went from a price point of $25 straight down to $22. It's tested that area 3 or 4 different times, couldn't handle it. You're pulling back with lighter volume. You went into the high with lighter volume. You're pulling back with volume expanded. Bottom line, those financials, the XLF, the larger banks, they look like they still want to go into lower price. So we'll see how that whole thing does shake out. Between the NDX 100, the NDX 100 today was the catalyst pushing that NASDAQ a lot lower. What was surprising is that you did have the composites come down hard. The biotechs went south. We came down $7. We're at 338 off that high that was established out there at 374. But the IBB is going to need more volume in order to break lower. What the IBB has done today is this. It did 2 million shares. You're coming into 3.5. It's in bad shape. Don't get me wrong. It's in bad shape. But we'll see if the IBB can handle another bounce out of these levels. The IBB on a longer-term basis looks to me like it wants to go to 242, which just would be a disaster. There's no two ways about that. And as I said a little bit earlier, what you are going to have out here tonight when Asia opens up, Shanghai had a fast market last night. That was down 4%. Now, that was down 4% after being up 40%, over 40% in the last 3 months. So that's a normal deal. It should be anyway. But fast, furious markets, folks, are always dangerous. The most dangerous market out here right now when they're opening up in the morning is going to be the DAX. The DAX has come off the high of 12,300. It's already down 2,000 points. It's coming into a lower swing, and there's nothing to stop the DAX. Now, so check this out, because the DAX trades like our NASDAQ. There's nothing to stop this DAX from coming into 10,704. You know, that's another 1,300 down, but that's a big number. You get a fast fall like that, you know, off that elevator, and that's gonna basically create huge amounts of problems. When you do look at the euro looks like it wants to go topside. The ironic thing about that, of course, is that everyone that is coming out with earnings right now is blaming the strong dollar on their earnings. And if we go over and we actually take a look at the dollar, what you have and what you'll see is that the dollar topped out in February. The high in the dollar, actually, no, March 13th. March 13th, the dollar hit 100.78. That dollar, was a straight line move coming off the last couple years, excluding these last couple of months. The dollar started out in July of 14 and just went straight right up. That did a 1 to 2 ABC structure on the way up. What that lays up, folks, is a vicious correction. As soon as you do over a 1 to 1.618 expansion or contraction, you got to change the trend. Just, mathematically, I don't, I understand the math behind it. I'm not quite sure why markets do that, but they do. They're stretched way too far. So even if you have a bull going and you extend yourself that far, and in this case, the dollar extends itself 1 to 2, you're going to have a very large correction. So, or it's the end of the market, too. Total change of trend, okay? I suspect that what we have here is a large correction. And what a large correction certainly can be is a lot lower dollar. Why? Well, because the currency walls across the world are just pretty incredible, no doubt. Some of the high-volume stocks, and we did have a high-volume market as we went south today. You had Apple down 290. GE was off 35. We had Facebook down $1.25. MGM Resorts was off 113. Some of the Dow stocks that went south out here. International paper, that thing's in tough shape. This is going to get interesting. This is why. The international paper, folks, okay, when you're in the box business, the box business tells a lot about as to what is happening inside the economy. This international paper, it took the B point out, took it out with volume. Your A point on this is 56.48. Your B is 52. Vicious price with volume. I mean, this thing was nasty. You stay right there, folks. We'll be coming right back with our man, Mr. Chris Gaffney, the president of Everbank World Markets. Dow finished down 142. NASDAQ off 77. S&P's off 25. You stay right there, folks. Come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 28th and May 5th that only subscribers to his opening call will gain access to. On April 28th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's Opening Call newsletter today on the front page of TFNN.com.
Do you know the 7 most critical factors that influence every decision you make and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this two-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We had the Dow Industrials finish down 142, NASDAQ off 77, S&P's off 23. And now we're going to go over to our man, Mr. Chris Gaffney. Chris is the president of Everbank World Markets, folks. And what I'd love you to do right now is this. Go to everbank.com/TFNN. And when you go there, what you're going to see is that it's going to bring up the future is brighter for those with vision. You're going to hit the investing tab. And as you hit that investing tab, hit the market safe CDs. And the reason for that is this. You have 48 hours. That's right, 48 hours. Everbank puts together these CD products, folks, that are pretty phenomenal. And we're going to talk with our man, Mr. Chris Gaffney, who's the president of Everbank World Markets, exactly what they do and what they may or may not do in the next 5 years. Chris Gaffney, welcome back to TFNN.
Well, thanks. It's a pleasure to be here, Tom.
You know, first, can you, and the reason we say 48 hours, folks, is this, is that this product, okay, and the product is the Market Safe Futures CD, Economy CD, has to be funded by May 7th. So can you explain how this product works, Chris, please?
You bet. It's called a Market Safe CD, and what it's based off, it's going to be based off the performance of 6 different currencies: the Brazil real, Chinese renminbi, Indian rupee, Indonesian rupiah, Mexican peso, and Turkish lira. And the CD, the key to it is that investors are protected against any principal loss. So it's a way to benefit from the upside of these currencies at the same time that you go to your principal. So It's a 5-year term, a $1,500 minimum investment, so it's very attainable and a great way to diversify an investment portfolio, getting exposure to some emerging markets that can be pretty volatile without.
Now, what's amazing, Chris, right, is that, and I happen to trade the dollar quite a bit. I mean, I'm in the gold market, I'm in the currency market. So, and, it's amazing. The dollar run, May of 2014, I mean, it was a nonstop move from May of 2014, up until 2 months ago. And it's amazing to me, we have in the earnings season, all the numbers are coming up, and every large multinational has been blaming the dollar, strength of the dollar, for basically not making their numbers. And the ironic part, of course, is that, like, when I'm looking at the dollar, it's like, hey, it looks like it topped out to me at $100. I mean,
Well, there we go. And as you know, in these volatile markets, timing is everything, and there's values that are presented. While we look at the multinationals that are complaining about the strength of the dollar and how it's hurting their business, and you say, well, how can you benefit from that? And really, it's buying currencies with dollars that are cheap right now, relatively speaking, and that's the key. In addition, there's one other unique feature on this. As you said, it's a limited time offer, and it's going to go away in Paris. But the one unique feature of this is that we have what we call a jump note structure. So these currencies improve in price, even anything over zero. If they improve at all versus the U.S. dollar,
yes,
clients are going to receive 10% over the 5-year term. So it immediately goes to 10%. Now, if they do better than 10%, if the average return of these 6 currencies is better than 10%, clients will receive that better return. So you have 3 different return scenarios. Either the dollar continues to strengthen and you just get your principal back, or the dollar falls and the currencies improve by somewhere over 0% and you get 10%. Or they improve by over 10% and you get over 10%. So it's really a great way, in my opinion, to invest into those emerging markets and not have any principal risk.
Yes, and you can see, folks, I believe one of the main reasons for the deadline is that when the Everbank and when they put these packages, these structured products together. Bottom line is that you put it together, you put it on, so that number one, you can take advantage of it, and number two, it's not a fluctuation going back and forth. You're making that trade right then and there. And as you go over to everbank.com/TFNN, look at that term sheet, folks. So you see all the terms that are right there. The 10% minimum, Chris, is just phenomenal. That is so cool, because the reality is that that's very unusual, that if in fact you can go positive, you're going to go positive by a 10% factor.
Yeah. Sure, and what's the opportunity cost? You always talk about what are you giving up in order to have the opportunity to earn the higher risk. And
yes.
Really, we have some great rates at Everbank, but in a 5-year CD, it's going to be tough to find, at 10% over 5 years, 2% per year. So, your opportunity cost is what you'd be earning on that money over the 5 years. And we feel right now, again, timing-wise, value-wise, it's a great time to get invested into the emerging markets, into this market-based CD.
And what does happen here, folks, is that let's picture that, we know the market has been pulling back, but let's picture that you want to get your principal back, because that's one big issue here, that you absolutely get your principal back no matter what happens. What is pretty cool inside this product you also have is that it's IRA eligible.
It sure is, and what a way to get the vacation into your IRA account, into those emerging markets. And again, with just a $1,500 minimum balance. So yes, we accept IRAs. Now, it's going to be tough to open an IRA within the deadline of safe spending. But if you just get the start, and get you invested. So as long as you get that process started by Thursday, we can go ahead and get it invested for you.
That's a great point that Chris just brought up. Okay, so what he had brought up, folks, is that if you're trying to get into the IRA, it does take a little bit longer because you need a trustee for the IRA. You put it in, and I can tell you, folks, okay, and Chris, I trade inside my IRA that exact same way, so I know what you're talking about, okay? And bottom line is that you can go over, hit everbank.com/TFNN. If the IRA can't get open right now, it's as a self-directed, it's not a big deal, but it's something you do want to look at in the future, folks, because it is a great way that you have a truly self-directed IRA. Of course, I brought this up before. You have 48 hours to do this, folks, and it's quite simple, right, Chris? You just hit you can hit open right now, fill out the form, and wire the money in.
Exactly, or you can, again, as long as you get that process started, if you hit open now and fill out the form right online, it will give you an approval online as far as opening the account, and then you have about a week to get the funds to us. So as long as you get the process started now within the next 48 hours, we'll go ahead and book it and know that client's going to invest that money. So we'll the trade and have some time to get us. So
yeah, I see. That's awesome. That's awesome what you're doing. I understand what you're saying, because then you'll know what the accumulation of funds are that you have. You'll know that how you'll have to basically put on a delta neutral trade, right? So that you go out there.
That's exactly.
Well, listen, we really appreciate the update. We appreciate the business, and folks, it's everbank.com/TFNN. You can also call them at 855-750-4051.
And we can actually take that application right on the phone. So if you call that number and say you want to apply online or apply on the phone, we can get that done for you right there. We have experts that will answer any questions for you and get the application right on the phone.
That's awesome. So it's 855-750-4051. This is going to be great just watching how this whole shakes out over the years, because you and I know, and folks know, that, the dollar has been, if we go back to 2001, the dollar was at 121. The dollar goes down to 71. Everyone thought, it does a large counter trend bounce. I mean, I think on a longer-term basis, I think we already went to hell with the dollar. Do you know what I'm saying? But the whole world is kind of, basically in these currency wars. So, you can see a large correction again. It's pretty cool.
Well, yeah. And what's driven the dollar is really a divergence of central bank policy. You've got Europe and Japan, dropping rates to negative territory,
yes,
or continuing to stimulate their economy. And at the same time, you've got the U.S. Fed looking to possibly increase rates. Now, a lot will be said this day with the labor report, whether or not we're going to see a June rise. I think it's probably, personally, I think it's been pushed off to September, and I think the market's pricing that in now too. But still, our interest rates are going higher. The rest of the globe, for the most parts, are going lower.
No doubt.
And therefore, the dollar has strengthened. But
no doubt.
That will change. That will change.
That's right. It's a it's a 5-year CD, folks. It's 855-750-4051. Chris, thank you so much. You have a great night, safe night. Look forward to speaking to you again.
Yes, sir.
Okay, man. Have a great one. You stay right there, folks. Coming right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. We had the Dow finish down 142, NASDAQ off 77, S&P's off 24. If you do want to take advantage of that market-safe CD from Everbank, folks, their phone number is 855-750-4051. You have until May 7th. You can also check it out at everbank.com/TFNN. Let's go to Brent in Martinez, California. Hey, Brent, what's going on?
I'm doing just great, Tom. How are you today?
I'm doing good, man. You save any water last night?
You know what I was going to talk to you about real quick on that is you were asking me how I'm storing it.
Yeah.
And for now, I'm just doing the garbage cans. That's all temporary. My plan is to, before next winter,
Yes.
Build a whole catchment system. I have a huge raised covered porch.
Okay.
It's about 45 feet long, and it's off the ground about 3 feet, and it probably goes out about 8 feet. So I've got a huge area underneath to build some. I looked online to try to find some surplus storage tanks and different ways of doing it, but I'm just going to build myself some big boxes.
That's awesome, man.
Field on the inside, so I should be able to store about 4,000 gallons is my plan.
How cool is that, man? That's good living, man. Seriously.
Yeah, it will be nice to have that built-in supply. If we keep having these droughts, I won't have to be using the city water supply and draining the reservoir, so that's my plan.
And everyone's going to be hanging at your house having a beer because it's all nice and green.
Yep. I was calling about Valley today. It looks like we had a pretty significant day. It looks like, kind of established that C to D leg. I just wanted your thoughts, if you could.
Let's take a look. You get Valley. This is the largest iron ore producer in the world, folks. The low for the year is 545. The high is 1493. This came off the lows like a rocket ship. It came off 580. It's at 880 right now. Yeah, this wants to, you can see the volume coming in this first thing in the morning, too. So it looks to me like we bring this over and you're going to see it's the high November of 14 right there. Let's see. Where is she? There it is right there. November 21st. So November 21st, that's 995. Now, we're at 880. It's going to go after the 995. But, this thing, man, can go after 1075 in a heartbeat. You're talking. So, technically, folks, the stock went from $42 down to $545. The leverage inside the iron ore business is absolutely incredible. The way iron ore works, folks, is that it really doesn't have to be mined. It's just like a big sand pit, and you just pull it out. So this is a company, number one, that takes in $90 billion. Iron ore is off the lows itself as a commodity. So you got some action here, man. I suspect it's going to run to this 955 before it pulls back. That's how it's looking right now. But it's strong like an ox, man. That absolutely is.
I have a question for you.
Yeah.
I normally just take profits on, I have options, which I probably will sell those, but I do own 2,000 shares of this. Would you just do trailing stops, or I kind of like to stay in the position, I guess, is what I'm asking.
Well, check this out. So this is what happened to me, right? I had this. I got this. We got this in the gold report. So I got it right off the bottom. We got it good. We got it at 580, okay? I sold it yesterday, and this went up almost 10% today, folks. And the reason I sold it is that, man, it was pushing into that swing point. The volume was too light. I'm saying to myself, man, we made 20% in 5 days. It's like, okay, I'm going to take that money. With that being said, I did put in the gold report today that, hey, man, yeah, this is going to go to 995. So in that context, yes, I would use a trailing stop on it, okay? And you can trail it now right under the low of today, which is 813, because this is a setup that 955 is game, but you know what also is game? 1261. So it's like, man, this thing, and I know the dynamic inside this on a fundamental basis too, and that's kind of like what I just brought up. It's real easy. When I first started the gold report, folks, okay, what happened is that I had this list of stocks that was so long it was insane. And this was one of them that was on it. And I'm saying to myself, man, what is this stock? It was a $2 stock, okay? And, we got our head wrapped around it. And all of a sudden, I'm watching it go from $2 to $5 to $8, to 14, and then it really just took off. And I couldn't quite figure out why it was mixed in the metals. But then I was at a show, and I had someone really teach me about iron ore. And then it blew my mind. I says, oh, I wish I even knew more about it in 2002. Do you know what I mean? So it's a material that is really easy to basically, push out, and it's all about China, man, and they're still building. Do you know what I'm saying? And they, Valley itself has so much iron ore, it's insane. So I'd stay right there and run it up, man. Run those stops up.
It's been a great trading stock. I did sell some. I bought options when I had that pullback to 688, and I went ahead and just sold those today for they're up like.
Listen, and you can't. Listen, the way I looked at this, it's 20%. 6 days. Like, man, I'm taking this thing. It's not even close, but.
I know. I had a huge gain. It was like they were up 233% on the options. So.
Yeah, no, it's a big number. And what will end up happening, and don't chase this, folks, okay? Because what will happen is this. This came down a long way. You can be trading this on a positive way for quite a while. And what you do with that, nothing, as I said a million times, nothing goes up forever, down forever. You'll get a pullback. And just when you think it's not going to pull back, it'll pull back. You set it up. And what should happen, by the way, when this pulls back, I suspect it's going to pull back to basically about 750, 798, right in that area. Because they like to pull back. What equities like to do is they like to pull back from the first thrust up. Then they get a thrust up, they pull back, they go higher, then they pull back to the first thrust, flip everyone out, and then take off topside again. So, cooking, brother.
All right, thanks again, Tom. You have a great day.
Okay, man, you have a great one. Have a safe one. And don't forget, folks, at TFNN, we do 10 hours of live programming every trading day. You can get all of that right on your cell phone, TFNN.mobi. That gets you the full audio stream. We stream 24 hours a day. If you'd like to get Tiger TV, which is the audio and the visual, go to TFNN.com. On the right-hand side, you're going to see a banner which says mobile devices. Hit that. Our servers will know what type of device you're on. You'll get it audio, you'll get the video, and of course, if you want to come to Basil's workshop tonight, you can do it the way you do it. Go to TFNN. That workshop's going to start at 5:30 to 6:15. Just test drive his newsletter. That will get you right into the workshop. And always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it and fly with it. Thanks for being here, folks. Have a great one. Have a safe one. Look forward to speaking to you right back here tomorrow. Go get them, folks.